So, for everyone who is already here, welcome to our Fireside Chat. We're hosting this Fireside Chat with Haydn Jones, who is from PwC. Haydn Jones is the Senior Blockchain Market Director, is that correct?
Correct, yeah, absolutely.
Hayden is also the author, or co-author?
Co-author, yeah.
Co-author of a book that's called The Executive Guide to Blockchain. So today we're going to be talking about blockchain, very high-level discussion about what is blockchain, the use cases of blockchain, and we're going to attempt to answer the question, is blockchain the answer to our questions in 2021? So let's kick off this event. I think, Hayden, if you can say a few words about yourself, and I think you're the best person here to explain to professionals and novices what blockchain is. So Hayden, welcome.
Thank you, that's very kind. Thank you very much indeed for the invitation, Peter and Michael. So Haydn Jones, so I lead the UK PwC practice of blockchain and cryptocurrencies. In terms of my background, I am an engineer, principally. I used to work for the UK Ministry of Defence. So I qualified in electronic engineering and did some cryptography, which later in my career, when I discovered blockchain, has become incredibly useful. I also qualified as a lawyer. So I qualified as a barrister in the United Kingdom, and then spent the best part of 7 years in investment banks, 5 years at a consulting company, and then 5 years at a huge privilege to work at the Bank of England, so the UK Central Bank, working for Andrew Bailey, who is currently the governor, but was then the chief cashier. And then I spent 4 years at Fujitsu as a managing director there. So I used to run big IT outsourcing accounts. And it was about 2013, I discovered Bitcoin. I'd always been on the receiving end of failed trades in investment banks. So I've had the awkward moment when I've gone into work and discovered that my sterling bank account was £78 million overdrawn, and we've got to figure out why. And there's a big steward's inquiry, and you've got to pay a lot of money for interest claims, and you've got to go and have a very difficult conversation with your boss. So I was always very interested in the way that trades failed and settled. And then when I discovered, started hearing about Bitcoin, so it's traded about $85, $95 or thereabouts, I thought this is really interesting technology, and bought some Bitcoin, and then started mining Bitcoin. And then it was about 5 years ago that I realized actually this is really important technology, and decided to leave normal employment. I set up a small business to help people understand how blockchain and digital currencies work. That led to different consulting engagements. It led to me meeting Maria, the co-author. And we wrote a book about our experience of teaching people, explaining to people how this curious technology works. And that led to different consulting engagements. Can you build this for us? Can you build that for us? And that led to the role I'm in PwC currently, whereby I used to bring business into PwC, and eventually said, well, actually, why don't you come work for PwC? So it's been a fascinating journey. I was brought up in North Wales as a bit of a nerdy geek, I guess. Fascinated with electronics. And here I am 25 years later talking about blockchain and Bitcoin.
So you basically you got into blockchain all by yourself and crypto all by yourself, is that correct?
Yeah, I started hearing about it, and I kind of reached out to my network, and there was very few people that knew anything about it, and I was connected to one individual, and the two of us decided to sort of get into it together. And that first step was to buy some Bitcoin, and at $95, interestingly. And I can remember the moment I was actually in a taxi, and I was at a particular place in London, and I can remember checking what was then a BlackBerry, and I can remember receiving an email to say that the purchase of Bitcoin had been successful and had been deposited in a wallet. And I remember sitting there thinking to myself, because at the time it wasn't an insignificant amount of money. And I can remember thinking to myself, well, one, I've not told my wife about this. But two, this is either going to be a really big mistake, or it's going to be something really successful. And over the years, I mean, it's a tough space to be in, because I've had difficult conversations with people in sort of professional financial services institutions, and you say you're into Bitcoin, and they think you're a criminal. It's a tough space to be in, but the moments of success that we've had, and what I see as the future, which is what this chat is all about, I think there's immense opportunity out there for people.
Mm-hmm. Well, actually, it's the fact that you mentioned that like a lot of people consider Bitcoin and blockchain, let's say, shady, right? Because it's associated with money laundering. I've personally heard you on one of your YouTube videos say that blockchain is, I think, the #1 anti-use case of blockchain is money laundering.
Absolutely. I mean, in the end state, we should be able to get to a place that actually we know, because we'll be able to know where every Bitcoin has come from,
mm-hmm.
and it's been sent to. And if we put Bitcoin as a cryptocurrency alongside regulated financial services, it's inevitable that the on-ramp and the off-ramp will require some form of identification. So in the United Kingdom, we've introduced the 5th Anti-Money Laundering Directive, which has been active since the beginning of last year. We have 90 companies who are temporarily registered with the FCA currently. But that requires a full identification, whether you're a custodian, you're an exchange, whether you're an issuer, or whether you're a wallet provider. It requires full identification of all your customers. Mm-hmm. So for me, it's inevitable. Those addresses whereby we can't attach an identity to will, in time, I guess, not be able to transact with, the conventional financial services ecosystem. So yeah, I think, and if I sent you a Bitcoin today, it's an incorrect statement to say that I'm sending you a Bitcoin, because what I'm actually sending you are lots of little bits of Bitcoin mm-hmm. that have been gathered together over the last 2, 3, 5 years, unless it's a freshly mined Bitcoin. And we can take any one of those and we can trace it back and we can see where it's come from.
Yeah, but here you have the conversation of DeFi versus CeFi, correct? Whereas centralized finance, you do go through KYC. Decentralized finance, you can have a wallet where you didn't go through KYC, and hence, obviously, you have an address, right? But it's not associated with an ID and with a name, so you can trace it to a particular wallet, but you won't know who that wallet belongs to unless it's.
Absolutely.
But is there a way of identifying, by the way, a wallet that has no name attached to it?
It persists anonymously until it's deemed operational. Somebody is using it operationally, but as soon as that transaction is attached to an institution that's regulated, mm-hmm. you can then you can form a relationship between that regulated entity. At least somebody within that regulated entity is associated with that address. Mm-hmm.
Sorry, Hayden. I think that's what sort of the travel rules are currently kind of looking to wrap around, because right now you have institution, and they're just putting in institution to end user. So for example, if you're a Coinbase user, you have to go through KYC, but as soon as you pull it outside the system, then Michael, as you said, it's just sort of numbered wallets, so to speak. But I guess it's progressing in a manner in which maybe that other portion will be sort of covered at some point. I think most people could argue that it's great to have this sort of frictionless DeFi ecosystem, but to have truly fair markets, you need to have some form of regulation wrapped around them.
Yeah, I mean, it's we've got to be honest here. People do great things with money, but people also do bad things with money. And the purpose of regulation is to protect society. And unfortunately, there are people out there that do bad things with money, and they're a small percentage, but they do bad things with money. So we've got to move to a place where actually we benefit from frictionless financial services, but we benefit in such a way that everybody is safe, and also that we actually our right to privacy is also maintained, which I think is incredibly important. So it's interesting because as you go through different jurisdictions around the world, that balance between privacy, utility, cash utility, the status of the local economy, it's a difficult policy judgment to make, and it's one that globally it's principally underpinned by money laundering directives, which ensure that actually the real bad boys or bad girls that are out there, we can at least do something to mitigate against the kind of activities that they have in flight.
Mm-hmm. Well, I mean, it's good that some countries are implementing anti-money laundering directives. Other countries are strictly just banning Bitcoin, right, and cryptocurrencies, such as India. Until when do they have people from India need to declare that they own cryptocurrencies, correct? Until or they need to sell them off. I can't remember exactly the.
I think that debate ebbs and flows. And I think that the most recently we looked at where they'd got to with that debate, and I think it was looking more positive. Mm-hmm. I mean, my experience of interacting with different governments, different individuals within governments and central banks globally, is that. It's principally driven by there's a big need for education, and the problem is that trying to explain something like Bitcoin, it's not the easiest concept to get your head around without sort of getting into the cryptography. So but I would like to think in time. I sort of draw the analogy between sort of radio. Radio has got this sort of magical quality because we can communicate with each other without any physical copper wire between us, and we could sort of say, well, that's kind of a bit like black magic, isn't it? You took radio 200 years ago, people would think you were sort of possessed or something like that. You see, so how on earth did they achieve that? And I think it's the same because technology grows up and people begin to understand what the safety rails are, the guardrails that we can erect around it. So I think that these debates are important, but it's a function of local culture and the sort of the local challenges. And I think in time they will subsist in the same way that this voodoo magic of radio sort of has subsisted 80, 90 years ago, and it's all embedded in everything that we do today, and we don't think about it.
But internet was in the same boat. Right. I mean, when
Absolutely.
Internet was born, people were using it for shady stuff. People didn't view it positively, and then slowly it started being adapted, and now we can't live without it. Right. So, I mean, it's all part of the same cycle, I guess. So we'll just have to see what happens in the future. But again, like Peter and I are more from, let's say, the crypto side of things. You are more from the blockchain side of the world. So like, I would love to hear your use cases. Like, what are the best use cases for blockchain technologies, not cryptocurrencies, but even like blockchain technology? Like, what should it be used for? What shouldn't it be used for? Like, can you tell us about like maybe some projects that you've been involved in?
Absolutely, yeah. I mean, I will say that, to be honest with you, Michael, I mean, a large part of my business is actually crypto related. So we do lots of tax, authorization, regulatory advice with both UK and European clients. So I'm very much, a crypto guy when it comes to the business that we do. However, we do, we do have blockchain capability within PwC. I think to pick up on your first points, what are the kind of bad use cases? I mean, I remember having a workshop with a pharmaceutical organization. And they were part of the finance and accounting team, and they'd engaged a company to come in and build some blockchain for them to do, finance and accounting reconciliations. And I'm just kind of sat there shaking my head, saying to myself, why on earth did you do that? And there was this sort of, well, we thought it would deliver efficiency, but blockchain, effectively, the smaller the use case, the fewer the benefits. blockchain is a big transformational idea that means that essentially at the highest level, we all write to and read from a shared record, okay? And that record can record store of value, which is what it does in the case of Bitcoin. Mm-hmm. But what we can also do is we can store things like provenance. So where has stuff come from? We can store identities, we can store credentials, and then because it's all written in code, we can store conditions. Really important, because if I can store conditions on a shared record and I can code those conditions in such a way that they execute based on the data that's presented to them, and I take my store of value bit and I connect it to my conditionality bit, I've got something there which is quite clever, because what I've got there is something that will release value, will make a payment if something's happened. So that's an automated contract. Mm-hmm. Now that's a really clever ecosystem, and it gives us the ability. So this red pen here. So what is it made of? It's pretty much made of oil because it's made of plastic. Okay, but Bitcoin is a provenance machine, and it's more than possible to actually put the entire material history associated with this pen, and there's some pigment that's gone in the ink. Let's have a look. There's a little piece of metal in the tip. There's a tip there, and it's more than possible. We can actually put the entire history of this pen all the way back to the oil field where the barrel of oil that it came from is recorded. Now that's super duper clever. Mm-hmm. Some of the use cases that we have explored, and I'll come on a very recent one that we have just implemented. Mm-hmm. We've looked at things like cocoa bean provenance. So prove that the cocoa beans have come from a specific location in the world. Prove there's no child labour associated with that particular farm. Coffee beans. Look at where do the coffee beans come from. Prove that they come from a farm where there's no child labour. And what you can do.
But does that offer any efficiency gains? Obviously, you have transparency. Does that what's the ROI for businesses who implement such a technology?
There is. There's a big ESG factor in there. Imagine being able to open your coffee and you can see out all the way through to the farm that everything has come from a sustainable source. Mm-hmm. So from an investor perspective, there's a big ESG perspective. But there's also clever things around tampering, anti-counterfeiting, because if I establish a cryptographically secure set of metadata at the point at which the coffee beans are originated, so that's time, geolocation. I might want to include some random images of the people on the farm. Mm-hmm. If I bond that metadata, so image, time, geolocator, maybe a little sample, onto a blockchain, when I am in the factory, I can be confident that there's been no tampering throughout the supply chain, because I can scan a QR code. The QR code is cryptographically secure, and it gives me the full provenance of those coffee bean products all the way back to the farm. There's a lot of hassle. The supply chain team, this is exactly all the kind of stuff that the supply chain team has sort of spend days and nights worrying about. Mm-hmm. So there's lots of additional benefits that can flow from that. Now,
I know that Walmart implemented a blockchain that was really successful, and I think their key reason was for partnership relationships, right? Again, to track all the logistics and partners.
I think the specific issue they had there was in relation to lettuce and the E. coli contamination. Mm-hmm. And actually, the challenge there is that people eating lettuce that's got E. coli on it results in very sick people, and then people taking legal action. So I think that was one of the principal drivers there. And the thing about Walmart, they've got the heft, the commercial heft, to be able to actually force or say to the supply chain, you need to use this.
Mm-hmm. They basically force buy-in, and I think a lot of these applications are very sort of situational or country specific. You mentioned on, sort of supply chain, the pharmaceutical industry, for example, in Africa has a huge issue with counterfeit drugs, which has a massive knock-on effect, and that's not just profit, but also, health of citizens. But when maybe looking at more of sort of like, say Western European or North American, the ESG angle, where people are, especially the millennial investor, which is why ESG is being pushed so hard, is because they are investing into companies that have like an ESG mandate, basically kind of, company-wide. So I think all of it is doable. I guess it's situational. And also I think, Hayden, we spoke, a couple of days ago about, getting buy-in from, the organization, but also the industry as a whole, right?
Yeah, I agree with you. And, we have we get these sort of inbound queries. Well, this is an issue. This has got to be blockchain. It's got to be blockchain. And then you sort of spend, no, it's not blockchain. It's not. You can do that with a database. I can do that. I can get my little boy to build that with a database. Okay. And that's what I'm saying. So the bigger the use case, the better the opportunity. Lots of people who want to share something that all needs to be trusted, all the way spread around all the way around the world. They don't trust each other. They don't know each other, but they need to operate in a way that they can all be trusted. And there's lots of data being written, lots of data that's been read. That's Bitcoin. Bitcoin is a universal payments platform that's got store of value on it. It's open source, and it's vulnerable to cyber threats, hacking 24/7, 365 days of the year, 7 billion people on the planet. But it's got store of value on it that can be sent person to person. There is an argument, and I have used this before, that the only use case for Bitcoin will be blockchain. The only use case for blockchain will be Bitcoin. Okay, because basically you're saying that it's a highest order in terms of the level of exposure to the threat that it incurs on a day-to-day basis. And then you sort of step back from that, and then you go through sub-tiers of different use cases.
So, but then that gives rise to CBDCs. Is that correct?
Yeah. Well, again, exactly right. So this is where the central banks borrow the ideas from digital currencies, and what they do is they say, well, actually, we can do this ourselves. And then there's, I think there's about 60 central banks globally been working on them since about 2014. 60 central banks, yeah. We're just in the process of releasing a global CBDC, so a PwC global CBDC index that tracks the progress of the central banks globally. Wow. In a retail and a wholesale context. So that will be out next week. But yes, you're absolutely right. I mean, what's interesting about that, though, is that the CBDCs, you can present them as this sort of panacea for solving all our money problems. But in some ways, the genie is out of the lamp in terms of things that we can do to allow people to send money to each other. And you've got wallets, you've got all of the proliferation of wallets that are out there. You've got all of the innovation in the payments ecosystem. You've got this thing called cryptocurrency. You've got this thing called physical money. What are we going to do with physical money? And then we've got platforms like DeFi, you've got CeFi. So I think all of these things will subsist alongside each other. I think there's an argument that says that the use of cash inevitably will decline.
Of course.
But actually, cash, people like to hold physical things. If we go back 3,000 or 4,000 years, we were all sort of carrying shiny stones and bits of, pearl shells in our pockets.
That wasn't practical, though.
But I think, and the good thing about physical notes is that they don't need batteries, and actually, we can do clever things with physical notes that makes them cryptographically unique in many ways. So they become, you can see a physical note almost like an NFT in some ways. So I think all of these, ecosystems that allow value to be stored and transmitted will subsist. And eventually somebody's going to come up with the next big thing after Bitcoin. Although I think I think Bitcoin is going to be with us for a long time. Bitcoin's like radio is.
So is Bitcoin, is blockchain only for the financial sector? That's a question that I had noted down. You kind of just mentioned that blockchain there's a theory that blockchain is only for Bitcoin and CBDCs and so forth. So is it only for the financial sector, for finance, or?
I mean, if you look at the frictional cost, if you think about it, so we're all sat here now, we're consuming a service, okay, in the form of a streamed piece of video, but that service is made up of a supply chain, and the frictional cost in that supply chain is principally, the cost associated with payments. There's costs associated with contracts, okay. There's costs associated with trust. And there's cost associated with is making sure that what I'm receiving is coming from somewhere that I believe in and I trust as well. You see, so within a supply chain, you've got this frictional cost, and the opportunity for blockchain is to be able to remove that frictional cost. So that the cost of payment against a contract, the cost of trust, so we can actually share trust across a large shared ledger. And there's risk mitigation in there in the way that we've described for ESG. So I think the challenge is, though, that is taking these grand ideas and then taking them into very traditional commoditized industries where actually the margins are very slim. The platform works very well. Why should we rip all of that out and start sharing all of our data so that everybody else can see it? So I think there's an inherent conservatism as relates to disruption, and I think it'll be new generation companies. So in the same way that the last generation created websites, I can see that our Gen Alpha, the next CEOs, they will grow up with robotics and the Internet of Things and blockchain enabled money, and they'll build robotic factories. We'll have the same way that Uber is its utility in a marketplace. What we'll have is robotic factories that operate in a marketplace that are fully automated, that are connected throughout the supply chain. So what we've got currently is factory environments that can be manufacturing environments that can, I think, ultimately will be disrupted.
It's interesting because I know that for a fact for a few years, especially in the US, when you spoke of blockchain projects to investors, to VC investors, it was taboo. It was hype at a certain point, and then if you were a startup running trying to build a company on blockchain, even 2 years ago, like a year and a half ago, it was absolutely taboo. It was like, no, we don't want to hear anything about blockchain, because there have been so many. I think the reason is that there have been so many unsuccessful blockchain companies, and people have tried to implement this technology, and the use case just wasn't there. It failed. A lot of people lost their money. There are many positive cases, but again, a lot of negative cases, especially in the startup world.
Yeah, and I agree with you. I mean, I spent I got into it and sold some good projects, and then there was about a 2-3 year period where actually I did very little, and it correlates with what happened to the price of Bitcoin, to be honest with you.
Yeah.
I come back to we may find the biggest use case of blockchain is Bitcoin. So, it's a tough gig to sell, to be honest with you. I mean, we sell lots of crypto business, lots of sort of tax advisory, legal, regulatory advice. Blockchain projects are harder to sell, and they take a longer period of time. a lot more hurdles to cross, because you're dealing with very, very, very traditional IT functions effectively, and they're very used to 25 years of centralized database technology. There's a story there that will be told eventually in time, I'm sure.
It has to be proven ultimately, I think, as well. And like I'll talk about sort of like the financial sector, just because it's a bit more close to home. Like, I think like what we're seeing right now is all boats rising in a buoyant market. And to your point, probably about mid 2018 to about early 2020 is when that sort of dead period was. We had the ICO fallout, and a lot of the good protocols are still around and still building some really great things, and some under the radar. Ethereum obviously isn't really the case, but like if we look at institutional or large company adoption, and I think those banks or institutions are still getting their head around what is Bitcoin. Maybe we'll buy some, we'll offer it from a desk to our clients. We know how we can store it, and that's kind of the long and the short of it. There are some really interesting projects which I think will take a long time to sort of get there, but are taking the approach of, okay, let's take some of the mechanics of blockchain and DeFi, and let's build it for a regulated environment. And I think as soon as that's proven, and some would argue that permission blockchains aren't the greatest thing. My stance is, permission blockchain with actors that are counterparties identified, that are working in a regulated environment to create their own, venue of sort, whatever that venue is. Once they get to that stage, I think we'll see a lot more pickup, a lot kind of more fresh capital coming in, rather than, it's great moving the market from 1 trillion to 2 trillion, and locked value in DeFi from basically 0 to whatever it is today, 50 or 60 bill. But looking at it in a broad sense, it's a still very cottage industry, and in my estimation, it's almost like a sandbox of sorts, which is I think is great for just general innovation, as long as you don't have a large retail population that's getting burnt on bad projects.
I think the one of the first planks, if you like, of operation ops and tech strategy I ever learned was run the bank, change the bank. Okay, and you can build an entire IT, well, pretty much an entire IT strategy for a bank of pretty much any kind around run the bank, change the bank. And then if you add in retire, maintain, invest, and you just attach one of those flags to all of your IT systems, you can build an entire IT strategy that will work really well. So what's the point I'm making? The change investment has to deliver a significant improvement in the run cost for the institution. Okay, so it's when we reach that tipping point that we actually know that we've got critical mass in the way that we deploy the technology. And the thing is, you don't deploy blockchain in a bank. Okay, blockchain will happen to institutions by virtue of CBDCs. So wholesale to CBDCs will come through, and then that gives you the ability to synchronize the transfer of an asset in the form of an instrument with the release of a payment. And it's that frictional opportunity there, because you don't need back office reconciliations then, so we can turn off all of that capability.
Yeah.
So you've got to constantly. Who cares? I mean, in some ways, I always tell people, who cares about blockchain? Okay, despite everything I've said, give me the business case. Why should I invest now? What's the incremental benefit? And actually, I think ultimately, you make the point around that sort of that quiet period, and intuitively, people kind of look at it and go, I get it, but we're not at critical mass yet. We're not at that sort of tipping point where it makes sense. So, but these are exactly the kind of problems that keep me awake 24/7.
But it's often it's market drivers. Not that we need to go into it too much, but like the whole sort of kind of that in 2018, the emergence of security tokens, and the long and the short of it is, you know, the investors don't want it. They don't know what to do with it. Companies don't care about it because all they want to do is get the money in the raise as easily as possible, right? So it's kind of that kind of follows the trend of, again, as you said, if there isn't critical mass, and for example, if a huge swath of you know, yearly investment isn't, you know, earmarked for ESG, then there won't be that push. But as soon as there is, that's when, like, you know, the keys turned, and you know, I'm sure Hayden, everyone will be kind of knocking on your door and wanting to spin up you know, blockchains for all different types or manners of applications.
I hope so.
So what?
I hope so.
So what shouldn't blockchain be used for? Like, what are the top 3 use cases, anti-use cases? Obviously, we mentioned
money laundering.
Yeah, money laundering number 1.
So we've done Nostro reconciliations, which is completely daft. I think that it comes back to, you know, it's replacing centralized databases. It makes no sense, you know, within organizations to sort of just concentrate. The bigger the problem you're trying to solve, the higher the likelihood that blockchain is actually the solution. So if it's concentrated and small, and actually you already have trust, if we all know that we all trust each other, we trust where this data is coming from, you don't need it. So in some ways, as soon as you step within a firewall, you've already got a trusted environment. So it's when you're trying to do things out in the wild, it's a great sort of security blanket, because the efforts, the reward that you get from participating in a way that's non-malicious is greater than the reward you get and the energy you require to participate in a way that's malicious. So
so what about like, let's say off the top of my head, a use case, KYC, like a shared.
Yeah, no, I mean, we've had
KYC.
I've had this debate on and off for like 5 or 6 years, to be honest with you. And it pops up again every now and again, and somebody says, "Oh, we can use blockchain for KYC," and I say, "Yes, you can use blockchain for KYC." Okay, but the problem is that all of the KYC, I mean, it's okay. So KYC is a process. It kind of works. It's a bit clunky. It's expensive, but it works, and it comes from people that we trust. Okay. If you wanted to create a centralized KYC framework, you've got to gather together. You're basically going after all the market of all these mid-tier players that do KYC authorization, you see. And then there's 2 sides of that market that you've got to disrupt, because you've got to disrupt the suppliers and you've got to disrupt the customers. And you've got to turn up with something which is as good, which is cheaper, which is simpler to implement. And you've got to feed and, you know, clothe yourself for 3 years until you get critical mass, and you actually start paying for yourself. And by the time it's like, this stuff works already. And then the other issue is actually you're into the territory of things like identity, and you know, that's another big issue, because you know, different countries have got very different attitudes about privacy. So
that's true.
It's I'd rather go after something like cocoa beans or you know, coffee. I mean, we've had a fascinating discussion about uranium, which has been very interesting. Mica is very interesting because they use that in talcum powder and makeups. So there's all sorts of interesting you know, child labor issues there. Components for, you know, planes, you know, fighter aircraft is very interesting. You know, you make lots of changes to those components, so you need to make sure the data set is correct all of the time. So there's plenty of other. I mean, KYC is a really interesting one. But, you know,
I know that one of the let's say, I think it's the economic department of Dubai that actually just recently announced that they're implementing blockchain-based KYC.
Yeah, and you see the advantage there is that you have what I would describe as a very focused government that is prepared to sort of say that is what we're going to do.
Mm-hmm.
Okay, you know, as you move around the world, different jurisdictions, as I said, have got different attitudes towards privacy. It's, you know, it's a hard one. Certainly, I'd say in the UK to try and break open.
Focus is a very nice way of saying it. I think there is an argument, maybe not KYC, but to, you know, let's say in a wallet hold an identifier of your identity, let's say. Maybe it's been issued by, you know, one of the providers or maybe from a central government, but in the event that if a certain, let's say outside of like the current travel rules, if, for example, let's say you need to identify the wallet, not just the wallet on the exchange you're using, but the wallet that you personally have, let's say on MetaMask, there could be a sort of a use case there where there is a token issue that you carry around with you for, let's say, a year that identifies that you are the person who holds that wallet. But I think you're right, Hayden. In the case of most, it's a very hard thing to sort of unplug. It you know, it works over the last 6-7 years. It's gone a lot better. You know, the big push in fintech was identity and KYC, and along with payment. So it's come along, but it's still like that, you know, 2, 3, 4, 5 day friction point on actually getting onboarded into a platform, which is sort of the argument for, you know, DeFi in some way and the unbanked and so on, that all you need is a phone and a wallet.
Well, let's just play this thought experiment game for a little bit. So, you know, globally, there's a big conference, all of the countries come together and they sit down and they say that anybody who's involved in financial services or touches money or is involved in money in any form, they've got to have a chip installed, okay? And that chip tracks all of the money that they receive, all of the money that they send. Now that's great, that will work. And it will clean up all sorts of stuff, all sorts of bad things that happen in money. But how, you know, we're people, okay? It's this balance between the way we live and the rights that we have, the freedoms that we have, versus our ability to live within society. And things like KYC sort of sit in between, because everybody realizes actually this is really important, and it's a bit of a pain. But actually, it's a kind of a less bad solution than all the other ones, and it, you know, it works for the moment. It does the trick.
Yeah.
But
won't CBDCs challenge that? Like, meaning that CBDCs can be tracked and all of our payments can be seen and known from start.
That is true. That is true, and I think that's exactly one of the policy issues that needs to be, you know, the central banks are wrestling with. And again, remember, we're not just talking about a UK or a US or a French or a German central bank. There are lots of other central banks out there in jurisdictions that have very, very different attitudes towards privacy and identity. So it's a tricky policy issue. And you've got to balance that against, again, you know, the fact there are people out there that do good things and people that do, you know, bad things.
No, I totally agree. So what's the future of crypto and blockchain? Where is it heading?
I think for me, crypto will persist indefinitely. I mean, as I said, you know, the genie is out of the box, out of the lamp. You know, to destroy something like Bitcoin, you've got to destroy every single miner and node on the planet, which is a very difficult thing to do.
Well, you can damage it. You can definitely damage it. Imagine tomorrow, let's say China says that we're banning Bitcoin and cryptocurrencies.
Well, it's a bit like trying to put wallpaper on a wall, you know, because you've always got these bubbles and you're sort of pushing them out. They'll reappear somewhere else in some form.
Yeah.
You know, there's so much information on the internet in terms of, and it's the internet that kind of allowed people to come together to build Bitcoin, because they had that wealth of that big knowledge base. So cryptocurrencies will persist. That technology spills over into central bank digital currencies, which, you know, in many ways legitimizes the technology. That then flows through into things like securities, so primary and secondary trading, primary issuance of securities, debt and equity. So we have financial services ecosystem, which is beginning to morph into something which is underpinned and settles through CBDCs. And then, we then start seeing interesting use cases in areas such as, supply chain. So I deliver 1,000 pallets of product A to yourself. And when they're zapped in the loading bay, there's a payment that's automatically released. And that avoids all of the 90-day payment costs that I incur, because you've insisted that you're going to wait 90 days before you pay me, which I don't really understand, forgive me, because hang on, I've just given you stuff. Why are you withholding my payment for 90 days? That strikes me as somewhat unfair. So I can, and that's a frictional cost in the economy, because somebody's paying for a funding cost, which actually ultimately the consumer pays for. So you start with Bitcoin, CBDCs, and then an evolving financial services ecosystem that then spills over into areas such as smart contracts in a supply chain context. And then we see things like vaccine certificates will flow through, and paper will disappear. Certification will be incredibly important. We need to be able to say who we are, where we've been, who we've touched, what we've been vaccinated with, what diseases we've had, because we've just evidenced that exactly all of those issues over the last sort of 14 months basically.
Peter, what about you? What do you think? What's the future of crypto blockchain?
There's always ebbs and flows in the market. I think we're at an interesting point at the moment where historically there's always been pullbacks when there's been markets like this. One thing I found interesting is I assumed this kind of buoyancy currently is a lot to do with institutions coming in, and it's still actually predominantly pushed forward by what they classify as retail or normal people. But I think I think the financial sector is still sort of ripe for the picking, and that will be the first one to go, just because there efficiency gains, there is huge opportunities. I was looking at one project just before the call, and it went up 19,000% in the last year. And that's attracted to a lot of people that look at it, and even from like a financial perspective of yield, people are still more inclined to take a punt on particular projects than stick their money in USDC and get, say, a 20% yield per year compounded. So I think that's number one, and I'm sure like a lot of the work that Hayden's doing is the tough conversations, and it's the conversations that I've come across before, or been a part of. The really, like, trade finance is a great example of like having 1,000 moving parts. Even talking about the ship, you have a Singaporean ship with a Thai crew, and it's funded by a company in Japan. Horribly complex, like really, really complex things that will take a long time to sort of unpick. But I think some of like the providence, especially around pharmaceuticals, when there is a huge impact on especially emerging markets with drugs that are false drugs that are killing people or hurting them. Any type of those really big use case problems that have a huge price tag, both say monetarily, politically, and so on. Those would be the ones that will be sort of driven first. But I think over the next, depending on what happens over the next, let's say 6 months, regardless, I think the biggest risk at the moment is sort of regulation in DeFi, and someone coming out and basically putting the hammer on, which I don't think is going to happen. Maybe like a 2 or 3 year sort of grace period for that to come around. But in the interim, I know there's lots of really, really great projects and smart people building like next generation sort of permissioned or permissionless systems that are directly aimed at bringing fresh capital in from larger institutions, which fundamentally where it is. But with the Coinbase IPO, that's going to put Bitcoin on a lot of people's radar, and I'm sure they're going to see huge growth in that as well.
It has. I mean, the market has been booming for the past week. It's just been going crazy. And the IPO was, I would say, it was pretty successful, right?
Yeah, it came off very well. I mean, I think the price has fallen back a bit, but
yeah, But it always does. It always does. That's normal. It pops up, then it goes down, and then now I think it's stable at like $330, I believe. I'm not sure what the valuation is, but I think it's in the 80 billion dollars, which is
it was a bit less. I think it's a bit less than that, but yeah, those are the sort of numbers. Yeah.
Yeah.
When the market goes up like this, though, it's in my opinion almost it's a worse thing than a better thing, just because you get a bit of hysteria, like we saw. Like Ripple's a great example, going from cents, and then like I was working in London at the time, and people that never knew anything about crypto were saying, "Oh, crypto, Ripple's going to go to $3," and there's people in office buildings figuring out how they can buy this thing, and then as soon as it starts to get a bit shaky and overvalued, everything gets dumped, and the whole market gets pulled down with it. So I don't particularly think having this huge growth spurts over a short period of time is a great thing. As long as saying that, as long as over the next sort of 6 to 8 months, it's sort of there isn't like a massive retraction.
Yeah, I mean, my sort of if people can save money, or they can make money, or they can reduce risk, it doesn't really matter what the solution is, to be honest with you.
Mm-hmm.
I mean, some of the blockchain projects we've sold, we want to do it because we think it's going to make us a load of money. It was quite easy to sell.
Yeah.
We want to do this because it's going to save us a load of money. Okay, great, get on with it. It sounds like you know what you're talking about, so do it.
But that's normal, right? I think that's how it's kind of the world goes round at a very sort of primitive level, which I think is perfectly fine, because if we're talking save loads of money because you're taking illicit drugs or badly marked drugs off the street, which then take a burden off the healthcare system, that's a perfectly noble thing, just as much as taking T+2 down to T+0. That's the same in my opinion.
No, I agree. And it's sort of, it's not even T plus, it's sort of it's simultaneous, so it's perfect delivery versus payment, as you would talk about in a classic security sense.
So going back to the title of this event, is blockchain the answer to our question? Did we answer this question? I think we did, to be honest. We went over so many points. I would say that it is to a certain degree, right? Or as you just said, it doesn't matter what the solution is as long as it solves problems, correct?
Absolutely. There's some great stories about, let me see, people invented the transistor and they didn't really know what to do with it and all this kind of stuff. And, technology is a funny thing. And, as people, we're natural innovators, and these interesting technologies pop up and people play with them and they don't quite find the use case, but eventually, for me, I can see so much opportunity in the way that this can be used to improve people's lives, and we will get there. We'll get there in time.
Mm-hmm. Mm-hmm. Well, it certainly has done so for many people who have invested in Bitcoin 2013 or prior, and especially have, as you say, the term hodled their investments up until today. And it is still changing lives for so many people. I mean, in these past 6 months or year, I've had so many people who've gotten into Bitcoin, blockchain, cryptocurrencies, have started investing. And I think it's for the better. People have started saving cash, putting it aside. The stock market wasn't attractive for them, but cryptocurrencies is something that is attractive for them. And they've started going into this, and yeah, it's been changing people's lives.
Yeah, I agree. And this is just the start of it.
So let's see where it goes. So I think let's wrap this up. It's been give or take an hour. I think we answered all the question, or at least I hope we did. So in this case, Peter, thank you so much. Hayden, thank you so much for being our super special guest tonight. Thank you for everyone who attended, and you will find this video up on YouTube very soon. So follow it in our channel and subscribe to our YouTube Nebeus channel. Thank you so much.
Brilliant. Thank you so much indeed,
Thank
gentlemen.
you. Thank you. Bye-bye. Bye,
Bye-bye.
guys. Bye. Bye.
Bye-bye.